Good morning, guys. Good morning, guys. On this video, I'll be talking about higher time frame and lower time frame order blocks and supply blocks. So, things you should note about these high time frames order blocks and low time frame order blocks is that high time frame order blocks are places where price likely reacts from, or where price are likely to um, breach. So, for example, if you want to take an entry after making your analysis, you have to mark out time order blocks or supply block from higher time frame. So after marking, for example, now this was another block. I'm sorry, a supply block I marked, and you can see how price reacted for me. So if, for example, price has not reached this place and you want to enter the market, you can, after the price has reached your zone, you can scale to a lower time frame. Let's check from the 1 hour time frame. From the 1 hour time frame, and from here you can look for entry for a short, or you go down to, if your entry or your setup is not clearly seen on this time frame, you go down to a lower time frame. So let's check on the 15-minute time frame. This USD JPY. Do I have? Okay, now this, if you were to mark out your structures, example, this way, this is a break of structure and a change of character, then these are all liquidity. If you check my previous video, you'll see we are taught on liquidity. Now, after this liquidity is formed, then it is swept, then price continues. You can see how it works. Then to go further, I marked this on this place is a supply block already, which you can see very well on a higher time frame. Now let's look at it. I think I marked the other block from a daily time, from a daily time frame. Now look at it. This was the supply block I marked. Look at it closely. It's these two lines. I marked it this way. That was how, and I'll show you how I got an entry in it. So after marking it, I waited for price to reach that point, and I knew that these are liquidity. All this here, they are all liquidity that it will later come up, sweep it before going down. So this was liquidity. Then I scaled down to a lower time frame. Now these are high time frame blocks and low time frame blocks. Well, you draw your order block or supply block on a high time frame and scale lower to lower order blocks time frame, so you can know the place price we react from. Okay, now after waiting, the price came back and tapped on it. Though I knew that my directional bias was that price is going to come to the supply block, so I tried looking for an entry here, and price refused to tap me in. So on this place, as you can see, okay, that was the initial one I drew. So after price rejected this place, I now knew that it was in for a sell. That's why I look for this position here. If you look closely, you'll see that there are two supply blocks, this one and this one. For my own type of trade, I always go for the extreme, that is the one that is more far. So after I did my analysis, when price was at this point, I used this pattern to draw my analysis, but price did not come here to tap me in. It's better than a loss. So the next place I'm anticipating price to come up to now is this first place and this second place. So that was the trade for today.